Ross O'Brien with the Economist Corporate Network in Hong Kong. I'm joined by Aidan of VF and Andrew Watt of CBRE. We've just wrapped up our Asian Business Outlook Survey meeting, where we've discussed the findings of our recent survey of Economist Corporate Network members. Over 250 members from around Asia Pacific gave their viewpoints on how 2012 performed for them and what they expect from the Asian markets in 2013. Now, Aidan, you had kicked us off by expressing some slight surprise that roughly half of our respondents felt more optimistic about the outlook for Asia last year.
Yeah, I am very optimistic about the outlook for Asia. I would like to say that at the outset, but what surprised me about the survey results was that optimism appears to have grown over the period.
Right.
Whereas we found some challenges in delivering the kind of growth that we've become accustomed to. We found some challenges during 2012 that we see continuing to some degree in 2013, and that's what caused my surprise that others had a more positive view that things were actually accelerating in terms of optimism and in terms of growth.
Now, China obviously tops the charts in terms of every respondent's interest level, and it was the largest market for inbound investment. Over 3/4 of our respondents indicated that they will be increasing their investment into China. But China is changing a little bit as a market, and certainly from your perspective, would you say that it's entering a new level of maturity, or the expectations are changing from what you can get out of the China market?
Yes, I think it's fair to say that there has been a lot of distribution development and growth, a lot of opening of retail, which is the sector, of course, that interests us the most.
Right.
So very rapid expansion over the last 5 to 10 years, and we're seeing some signs of some consolidation there, and investors in retail taking a little bit of a more cautious approach as they see that the growth in their same-store sales and other metrics that they use to decide on whether they're going to invest, they see those slowing down some.
Right.
So there is certainly more cautiousness in the market. That has led also to some other things like inventory build-up and more promotional activity. Some of that I think is temporary in nature, that will correct itself. But I think there's also been some form of reset of expectations, that people are being maybe a little bit more realistic about what the future can hold. I think that also applies to the GDP growth rates that we're seeing. They're less impressive than they were in the past. So I think what I see in terms of the consumer goods sector, the retail sector, it kind of mirrors that in a way, with some near-term disruption as that reset occurs.
Okay. Now, another sort of expectation reset we saw in the respondents was India, which kind of fell down quite a bit in terms of numbers of respondents feeling that they were going to increase their investment there. But Andrew, you were actually, if not surprised by that, you were actually very confident that India still manages to please multinationals in terms of its ability to add to efficiency through the expansion of outsourcing and BPOs, and indeed many of our respondents in the meeting indicated that they were ramping up quite significantly within India.
That's correct. Certainly India, I think, is still a cost play. When you look at the global BPO market, India comes at the top of being the most cost effective. It's got a very broad talent pool coming from the universities. It's got almost open-ended property supply when you want it. So absolutely, we're seeing a lot of the banks still putting a lot of the back office operations, and not just the call centers. This is a much more sophisticated operations which normally would go to Singapore or elsewhere, or be based in London or New York.
Well, one of the reasons they're not being based in Singapore is obviously the cost, and as our respondents indicated, costs are kind of shifting from being a minor irritant in Singapore to actually being a reason to doubt putting a significant chunk of their senior management in this hub.
Yeah, from my discussion with clients, if it's your core business in Singapore, then you're going to accept that you're going to have to deal with it. But where you've actually, several years ago, made a play to Singapore as being a low-cost or even a medium-cost location where you could put a lot of global operations, that is being definitely rethought.
Right.
So you're seeing a lot of the banks now taking their staff from Singapore and putting them in India. But also maybe, Singapore still may, benefit where you're taking people that you wouldn't normally thought out of, London, New York, Paris, and put them into Singapore. But definitely it's causing, the corporates to rethink their business strategy around support.
Right. Now, I mean, not to pick on Singapore, because obviously Hong Kong is a famously expensive hub, and our respondents also indicated that was a more than an irritant in Hong Kong as well. But it is, increasingly we see many more global roles being placed into the Asia Pacific market. Over half of our respondents said that they have some sort of global function that's resident in Asia, presumably in a hub like Singapore or Hong Kong. But again, Aidan, as our voice of surprise, you thought that those figures seemed high, as were the number of global firms that had a board member resident in Asia, which now, according to our survey, is close to 40%.
Yeah, I think I can relate to the trend that there is greater emphasis, and I think there should be greater emphasis on having senior representation, ideally board representation, resident in the region who fully understands the opportunity. I think that's very helpful for local management as well, to get the kind of resources within a multinational environment that we need to take advantage of the opportunity and indeed to meet expectations. So I would regard it as a very positive trend. The only surprise that I had was that such a high proportion had already that in place. And that you had noted very significant growth in that between 2012 and 2011.
Right.
But the trend itself is one that I think is a good one.
Now, in conclusion, you felt at the back end of 2011 that perhaps people infused too much enthusiasm into their 2012 outlook. With the slight turn of events into the back half of 2012, do you think that there's an anchoring bias the other way as we look into 2013? That is, that we perhaps are a little bit overcautious about what we expect to get out of the Asian market opportunity this year?
Yeah, I think that's true. I mean, I am cautiously optimistic about how 2013 will evolve. I expect the first half of the year to still have some challenges dealing with some of the residual kind of structural issues in terms of inventory and other things that affect our performance in some of these markets. I expect that will continue to change for the better in the early part of the year, and that there will be an uplift as we go through the rest of the year. It's a little bit hard to see the timing. I think there's quite a bit of uncertainty out there as to how that will play out. But I think this time next year, I am optimistic that we will have a positive outlook, and that 2013 will have evolved in a positive way.
And Andrew, where do you sit on the caution optimism spectrum for 2013?
Well, it was interesting, talking to our clients in terms of what was their view for 2013 this year, and certainly in the insurance sector and the banking sector, and even the retail within that. The word was challenge. That was what was coming up. It's going to be a challenging year. So I think people found 2012 difficult, and I don't think they're going to be over optimistic until I think the macro climate starts to maybe look more settled, and then business plans can be put in place. And yes, I'm optimistic that subject to Europe, fiscal cliff, those things, that you could see Asia really rising up and being the star performer.
Excellent. Well, Andrew, Aidan, thank you very much for your perspective and joining us for this meeting. I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. You've been watching our wrap-up of our Asian Business Outlook survey meeting. Thanks for watching.